Is it possible to raise $10 million in 10 months when you're getting started in real estate, in multifamily investing, while you're still working, doing other things, or working a job? Is that possible? Well, my good friend Patrick Grimes is here today to say that it is possible. Not only that, he's done it, he's continuing to do big deals, both from an operations side, from all the different aspects of a deal. Just an amazing guy. Really excited to have him on today. So, welcome, Patrick. How are you?
Bronson, hey, I'm really excited to be here. Doing great. I've been following you for a long time, and I've been attending your meetup, and it's great to be kind of full circle here and be on your podcast.
Yeah, it's great, man. I think, over the years, it's been really fun watching you because I don't know if you got a hold of Tony Robbins or, Massive Action or something, because, for a while you were like,
Bronson's meetup.
yeah, yeah, yeah. Well, you were around, and then all of a sudden
Mhm.
you were just like a rocket ship, man. You were taking off, you're doing deals, and you're going to events, and you're raising like big money, and it was just really impressive. So I'd love to hear. Actually, I've heard it, but I'd love for you to tell some of the people listening, just to tell them some of your story of kind of your background and kind of how you got where you are.
Yeah, so I come from a machine design, automation, and robotics background, so I'm an engineering geek, kind of through and through. I started that path back out in 2006, and I stayed true to it. Bachelor's in mechanical engineering, master's in business administration, and a master's engineering. And it was my first job where the owner said, "Hey, you need to invest in real estate." And I was like, "Well, I like this high tech stuff." And he goes, "Well, that's a very volatile market, and you're going to need to, the life of your future family, and you're going to need to invest as much as you can, as soon as you can, in real estate for that." And so that's kind of what kicked me off. And even today, he still invests with me. But it started out with a single family development that went south in 2007. So I actually lost a lot of money. And that's what brought me eventually over to these stabilized cash flow income producing deals in recession resilient markets, and underwriting much more conservatively, because now I'm high risk adjusted returns, and so that kind of journey led me to where I'm at right now.
Oh, I love it. It's interesting. Your background in machine automations. I mean, a lot of what we do, there's a lot of automations we build into the way we operate deals and working with tenants, as well as just, when you start building a platform and you start just, educating the world on how to do multifamily investing. And so I love that you have that background. And how do you feel that's helped you in your real estate career, kind of having that background?
Well, I think it's great because a lot of there are some really serious people out there that come from the institutional side, but on the private real estate, private equity, and multifamily world, it tends to be kind of a lot of people figuring not from the systems, processes, engineering, high tech space. So I do bring a lot of that. It helps out with making sure that I've got the right automations in place to identify opportunities, follow up with investors. And there's tools out there like Reonomy that uses machine learning and AI to do overnight what it could take traditionally lifetimes to accomplish. So there's a lot of tools out there that are helpful, and coming from that, it's very helpful from the high tech background. I think it probably does give me an advantage there.
Yeah, it is. I think it's the more the world is changing, and I'm sure a lot of people listening too are just realizing so many things are changing. There's a big trend now is people and businesses getting virtual assistants overseas that can help with repetitive tasks. And just from what we do, I mean, we have our weekly, blogs and YouTube and different things. And even when it comes to the deals we're working on, I mean, you can have virtual assistants help check things with property managers and do follow-ups with them on certain things, or help do marketing for tenants and all kinds of stuff. So I think it's really cool how you've, you have that background you've been able to leverage into real estate. So you had your single family house. I want to kind of delve into that. So you had your single family house and you had somebody with you who said, "Hey, you really need to go into multifamily." Talk to us a little bit about that journey, because I know a lot of people, myself included, started with single family and then realized this is just not really going to get me to where I want to go, or it's going to take 100 years, or what, it's going to take way too long, versus, man,
Mhm.
multifamily is like that rocket ship, and your success kind of shows that. So talk to us a little bit about kind of that journey and how you educated yourself, and what action steps that you took to get started.
Yeah, so I know we're going to do the nutshell version right now, but I do have an Amazon #1 bestseller book out that I
Wow.
put together with a bunch of other co-authors. I'm going to offer this as a gift at the end to your listeners, so stick in and you can hear the whole story. Also, the story of the lead guitarist for Def Leppard, some other more interesting people than me is in there. So
Awesome.
wait to the end for that. But So yeah, so in the single family business and doing the high tech space, consulting and machine design, working for Lockheed and medical device and Tesla and companies like that, there just really wasn't a lot of time. And so I was moonlighting these single family deals in recession resilient, like the Houston's, places where the comps, you can renovate to the comparables. So I was doing a lot of this at nighttime and moonlighting it. And it was working. I was getting great deals, and I was refining out and holding this portfolio of single family, but it was challenging. I could only do a couple at a time maximum. And then when I met my wife, my soon-to-be wife, it actually came, well, wait a minute, the trade-off in single family is your hobbies before, but now it's also my other half, my soon-to-be other half, right? So then I had to say, well, look, I can no longer moonlight single family. Let's go to, let me spend some time. So I took a break. My wife was there for the last closing. And then we pivoted for about a year or two while we were getting married in California and Beijing. She's from China. I started running to podcasts all the time. And it was actually one of Michael Blanc's podcasts was originally introduced, and then Dave Lindahl and a bunch of others. I got into the space learning, and they spoke directly to my challenges, right? The property managers not being on site, chasing them around, the vacancies, just draining a year of cash flow. I was signing on the loans personally, all these things that, you personally guaranteed, all these things that are a challenge. And partnering up was the difference, right? Not doing it all myself, teaming up with people like yourself, Bronson. We partnered on a, Canopy Creek deal that just knocked it out of the park in Florida. And we had great sponsors for the asset management, for the deal finding, for the capital raising. And then when you get the perfect team together, these things soar. And then you can focus on my superpower. My superpower really is in the analysis and the due diligence, and then in sort of the asset management side, more of just reporting, right? I'm not passionate about the inner workings of the day-to-day of an operation.
Right.
And so there's people that's all they ever want to do, and they've got 20 years doing that, right? So I'm more the hunt. So for me, it was just a very natural progression. And then it took a couple years to really hit it off. And I can tell a little bit about that part of the story.
Yeah. Well, I wanted to highlight a couple things there. One thing I've really admired about you is your work ethic. I remember seeing social media photos of you, flying from one property to another, and you're, in a lie flat seat in business class or something, but you're, for a while you were living in Hawaii, so which sounds glamorous, but when your deals are mostly in the South, that's a really long way around the world to go do that stuff. But you worked hard. You were doing, you really, I mean, people wonder, how do I get where I want to go to my financial goals? Whether you are passive and you're busy working a job, or you're more, you want to be active, you want to be doing the deals yourself. It really starts with taking steps and taking daily or weekly steps, going to events, going to conferences, going to meetups, learning how to do it, analyzing deals, and just really doing the work. And I think if you're willing to do what other people are not willing to do, it pays off so much over time. And this is really, I think, one of the most undervalued and underestimated skills in the world, is learning about investing, and particularly multifamily or other types of commercial real estate investing. Because once you learn those skills, once you know how to analyze deals, once you know how to do diligence on a property, walk through, like, it's very transferable. And you have something that now you're developing this passive income, you're developing this stream of income over time, which is really, really impressive. So you did that, and I know you mentioned that you have some different partners that you've worked with. Let's just talk for a minute, a little bit with that, just as far as the team, because I know people think sometimes that, oh, I'm doing single family, all of a sudden I can switch and just do all this stuff all myself, and like you did everything 100% yourself. You raised all the money, you did all the, you did every single part of the deal. But I know it's a team sport. That's one thing I've learned as I've gotten older. So tell us a little bit more about kind of how you've added team members, how you see those roles working, and what you really look for in partners that you work with.
Yeah, so the barrier to entry, and to your point about working hard, it's pretty high. And in order to get and find good deals, you've either got to start your own mailer campaigns, or you've got to have really intimate relationships with the old boys club, the brokers that are out there, right? It's really hard to get into those rings where they'll be the first one you call for that off-market deal. And so my wife and I were constantly traveling around for that. Underwriting deals, meeting brokers, to only see them kind of pass it off to other more experienced long-term syndicators. When we finally started, when I brought deal after deal after deal to a sponsor, who had done a bunch of deals before. And one day he said, hey, let's just work on one together. And it was a small unit in South Carolina. And I did just about everything. Like you said, I flew around constantly. I was doing the projections performance. I did the slide deck. I've done all the slide decks for all my deals. And so it worked out because, you know, he was able to find the deals, but he was a little too busy to get them over the finish line, right? And so on the other side, sponsors are looking for individuals that'll be the KP, the key principal, because another barrier to entry is you got to sign on the loans. And so you need a team of people that can bring net worth and liquidity to deals. Typically that's net worth and loan amount and liquidity. And so you've got to find other sponsors, kind of the guys with the heavy balance sheets. I've been fortunate to do that, or do the KP side on about half of my deals, which actually helps to build experience, because the lenders, not only if you have the net worth and liquidity, the lenders are going to want to see multiple years in the experience of the type of asset, typically in the area and in the business plan. So the valued plan. So you need that. And so once you found a deal, you've qualified for the loan, you got to raise the capital. And I think Bronson is just the most incredible guy. And, you know, I was really excited to work. There's lots of key partners like him who comes with a great experience and a mindset for wanting to educate investors. It's exactly the way to do it. So very happy to have sponsors like that. You know, I've obviously raised some capital myself. I come in a high-tech background. I was able to be more intimately involved in creating of the underwriting, the projections, performance, and the slide decks. And I think some of that behind the scenes really helped me articulate well. You know, investors have been in high-tech space, have been entrusting me with multi-million-dollar contracts for machine design and automation projects. So it wasn't a far off skill with articulating a much lower risk return in multifamily. And so I've been able to raise, in fact, as Bronson pointed out, in the first 10 months, I did pull in about over $10 million, which is, you know, I didn't even notice when it happened. Actually, I was working so hard, traveling all over, living from Hawaii, red-eyeing out and back. It was months and months later where I said, hey, Bronson, by the way, it turns out I raised like 10 million like a couple months back. I didn't even notice because I was working so hard. Then probably the asset management, the ongoing day-to-day, those are those people that are take it from 90 or 95% to 100%, right? And you know, those are individuals that you need on your team as well. And they're like not the project sort of find a deal, the hunt, the look, but the ones that want to perfect it, right? And those is very incredible. There's a lot of different personalities necessary on these teams to make them happen.
Yeah, you know, it's really impressive, all the work that you've done. Let's say someone is new to multifamily, or they're like, hey, maybe I've been around it a little bit, or I've been involved in a deal. What is it about multifamily that you like so much? I mean, I could talk a lot about it, but what are a few things that you find that are just amazing about multifamily investing? Because obviously to do it, you've got to believe in what you're doing. You invested your own money, your own time. So what is it, you know, what's the compelling case for investing in multifamily?
Well, so the case is very strong, and I think the difference is that most people just don't know it exists. The traditional, and I know I used to be a financial planner, but traditionally financial planners are selling a portfolio, right, of approved investments. And when they say real estate, what they typically mean is a REIT, right, with real estate investment trust. Turns out that's like stock in a company that's buying.
Yeah, financial advisors have no idea, most of them have no idea what syndication is. And I agree, 98% of people that should be doing multifamily syndication have never heard of it, including a lot of financial advisors, because also they don't get paid. They actually take money out of their pocket if they let you, you know, or they encourage you to go do syndication. Some really sophisticated ones will, but most of them are like, no, you know, keep it in the keep it in my assets under management, and then I can, you know, charge fees on it. It's crazy. So yeah.
I think I've been in like a dozen of those calls before, and they've called me saying, hey, but then they don't practice selling away. And so I think the compelling aspect of it is that unlike sort of the REITs, we're in real estate private equity, not real estate investment trusts. And within real estate private equity, you can hire sponsors that are not completely institutional with tens of thousands of people where it's purely transactional. You can hire sponsors like Bronson and myself to come in there that have a relationship, right? And instead of your money just going into a blind pool where you're just a number, you'll actually own a real percent share in real property. That comes with a significant number of advantages. One is we'll present to a deal to you and you can choose to invest based on its merit, right? And then the other advantage is with real percentage and real property, you actually have a property backing your ownership in that LLC, meaning that if something goes wrong, you can still recoup some of your investment because that property, so some downside protection because you actually own real property. Secondly, we provide traditionally higher returns from a mailbox money, which is Bronson's show name, right?
Oh, yeah.
Those monthly dividends or quarterly dividends. And then another thing we do that's different is so Bronson and I typically are in sort of not only a real estate private equity, but we're in a multifamily syndication, right? Because you do real estate private equity, all kinds of assets, but multifamily is the high risk adjusted return, very low risk, tried and true path. But with inside that, we're in a value add business plan, right? Which means we buy things that we don't have $1 billion to spend and we have to spend it with that pressure, right? We find a great deal and we fund it based on the merits of the deal. And traditionally, that's a value add deal where we're buying it under market and from typically poorly managed, right? Combination of those means in the first 2 years, we can raise those rents to market, put in better management. We've created value. That's what that value add is. That allows us to capture that and then do a refinance or a supplemental loan and distribute it back to the investors. So we can do what's a return on your investment, but we can also do a return of your investment, right? So you can then get those dollars back with the non-taxable event refinance and go put it back to work. Your investment's de-risked now, same dollars now in multiple investments, start to compound your wealth. And the whole time, traditionally, that's not taxed. Now, it's not always the case. You need to talk to your CPA. But when it comes to the monthly or quarterly distributions, we pass through depreciation expenses that you otherwise wouldn't, paper losses you otherwise wouldn't get in single family, because with larger commercial assets, we can pass through very large rapid depreciation and bonus depreciation, very sizable on the tune of like 50 to 70% of your investment. So sometimes in the first year, sometimes that means your mailbox money is traditionally not taxed at distribution. Kind of add that with your refinance proceeds and you sometimes get 50 to 100% of your investment back in that third year. And Uncle Sam hasn't come and knocked at your door yet, oftentimes, and you can put that back to work. So I think those kind of aggregated benefits are why I'm in this by design. I didn't know anybody in multifamily syndication. I found my way to listen to smart people like Bronson. I found my way into this space, and it's an incredible asset class.
Well, Patrick, you're right. I mean, I've called multifamily investing, particularly multifamily syndication, it's really an unfair asset class because you get to, get better returns, you're tax deferred or sometimes tax free, benefits, comparison to investing in a REIT, which is really where you own paper assets versus actually owning something physical, as well as you own the market. So real estate's strong right now. So the REITs are doing great, but if it goes down, you don't have what Warren Buffett calls a margin of safety, right? So value add provides that margin of safety. So when we go in and we do the renovations of $8,000 to $10,000 per unit, you see those rent bumps. So it brings the returns higher. So instead of maybe 7, 8, 9% traditionally with some of these other REIT type of newer investments, and then we can kind of go down that road as well for new construction. But the idea of having the value add is really huge. Let's shift. Yeah, absolutely. Let's shift gears for a second here. What's one thing that you wish you had known before you started on your multifamily journey?
Well, I think that starting on my multifamily journey, say call it for the first 6 months to a year, it was a mindset of I need to go do it all myself. We were traveling constantly, like I met my wife and I, talking to brokers, underwriting deals, trying to find something that was our own deal. And what I didn't, and that's the single family way. And that was what people think. I mean, they're very traditionally, I was happy to give my funds away to a broker to invest in the stocks accounts. But when it came to real estate, I felt like I needed to own and control. And I feel partnering up, meeting a cross-functional team like you do in the high-tech space that are all very good in their niche, I believe that's the right way to go, not only in the short term, but in the long term, you're going to live a better quality of life, whether it's your passive side and you're wanting to give your assets to somebody who can keep that velocity of capital high and keep recirculating it without trading off your family and your hobbies, right? Or if you're on the active side and you don't want to do the painful tasks that you really don't like doing, find somebody whose superpower and passion is in that. And I think had I embraced that earlier on, it's not natural coming from the single family space where the deals aren't big enough to support anybody else. You got to do it all by yourself. But I think it would have helped out tremendously.
Yeah. Yeah, I think it's interesting. You know, a lot of times people that we kind of going back to 98% of people that have never or should be investing in multifamily syndication have not. These are typically people that are well-paid professionals, you know, doctors. That's my background working with physicians. Maybe it's attorneys, CPAs. It could even be business owners or retirees. And the biggest thing I think that people don't understand is that it's not just the investment that you get on a deal. It's the 50K or 100K that's invested. It's getting the confidence that you know you can invest in this asset class outside of real estate and generally, you know, hopefully double your money in every 4 to 6 years. I mean, that'd be amazing, right? If you could do that. You know, obviously I'm not speaking of any specific investment, but you know, if you can be a part of these type of deals and gain confidence that this is something else that I can do. And that's why so many people that are really wealthy are have made it through real estate because you know if you pay less or no taxes, you can defer a lot of that. You get higher returns. You can use leverage. All these things are so positive, particularly in a time of inflation. I mean, right now they've printed or created 40% of all the currency that's out there in the last couple of years. So that's going to have a dramatic effect on asset prices. What's your? I mean, I know we didn't really, you know, kind of go over this before, but do you have any opinions on inflation or kind of where we're headed or where the, you know, the real estate market is headed now?
Well, I do listen to some of your content on this, and I do listen to others. And I go into every deal since I lost everything in the last market cycle, and I learned about speculating versus investing. I look through a very sharp lens into recession resilience, not only in the markets, but also in the way they're underwritten and in the way they're financed. And the majority of the deals that I'm in are very low leverage. Like right now I'm doing 772 units, 67% break even occupancy. So 60% loan to value, 50% loan to cost. So even in the downturns before, we've seen the multifamily get into the 80s, right? So I like to think if a big market cycle happens, like inflation or occupancy or rents can't keep up or people can't pay the rents to keep up with inflation, I like to see that we're very conservative going in, so we know we'll cash flow in those times. Now, on the other side, it is true that the assets themselves are somewhat inflation hedged, right? Because you know the percentages of inflation. So if you have 10% of your revenue goes up, well, you're going to be able to pay your expenses because your expenses in multifamily are only half. So 10% of half goes up, and you still have a spread, right? So your expenses go up at a much slower rate than your revenue. And so provided that the tenants can continue to pay, you can keep your rents going up proportionately. Provide, if it's possible, that it becomes a little less affordable because wages don't increase at the quite same amount as inflation, then you just need to be underwritten very conservatively, which is not only an inflation-focused conversation, it's also a market-focused conversation.
Yeah, absolutely. You know, there's the macro stuff that's going on in the world with the inflation and just continual, governmental factors and all kinds of things. And there's market specific stuff where things are affected differently. And that's why I think you and I, when we look at deals, we also look at, what are the local, things that are happening, such as, how business friendly it is, how landlord friendly. You and I currently are both in California. And so in Southern California, in Los Angeles area, where it's not very business friendly or landlord friendly. I think in LA, the city of LA, which neither of us live in the city of LA, but they just passed, I think the eviction moratorium goes till like mid 2023, which is kind of shocking. I mean, you can literally just have not paid rent for like 2.5 years, 3 years, 3.5 years. Like I don't know as a landlord how you do that, but to buy in areas. Let's talk just for a minute about what kind of markets do you look for? What kind of trends are you looking for in markets that you buy in?
Yeah, well, I kind of, when I talk to investors about this, to try and make it relatable, aside from all the macro and microeconomic trends with, all that we calculate and we look at, and of course, there's there's the recovery, expansion, hypersupply, recession curves that you look at, and each market's kind of on these decades-long cycles. So aside from all the complex stuff, when you look into where you want to invest, and yeah, being based out of California, but also having lived many other places, I look at where I want to start a business. Because you think about investing, it's like, well, I want it, people like immediately, like I want it nearby and under control, right? Well, where are the businesses going that are successful businesses? You know, those are going in places where you have income stability, you have low taxes, right? Well, your investments are the same. If you have rent control and you have eviction moratoriums, then you don't have income stability in your business plan. You don't have the ability to be able to drive rents. And if you can't evict people for not paying, then you have to potentially deal with being unable to execute your business plan. So it is very much a kind of a macroeconomic focus when I look at places in terms of what are the expansion curves and currently growing, because I don't want to I want to work for every dollar doing a value add plan, but I want that tide to be rising in the area, right? I want to force that appreciation, but I want it to be one of two. Then you've got job growth, which traditionally draws people in. So it's job and population growth. And then within those submarkets, that kind of gets you to the submarkets. Within those submarkets, you got to find the path of progress, which are places where you see buildings being built, high box kind of retail outlets. You see the local investment. So you want to make sure that you're in a path of progress instead of a digress, right? Even in every market, some places are going south, some places are going north, and it does take some intimate relationships. And you got to make sure you're not in a high crime place, right? In our business, we're a cleaner, safer, and improved living experience for our tenants. B and C class workforce housing, which traditionally is the lowest risk. We want to make sure that we know we can bring this up. We can reposition sort of what they kind of call the ugly house on the block, or we don't want to be the first to blaze the trail, but take a B asset, bring it to this A neighborhood, or take a C asset, bring it to the B neighborhood, that kind of stuff.
Yeah, well, Patrick, I just obviously appreciate, we've been partners on a deal, and it's been great. We've obviously had some great experiences, and just also being in a lot of the same circles. It's awesome. But one thing I really appreciate about you is your work ethic, as well as just the way that you bring your, like you said, just being able to really get in, look at deals different ways, underwrite, and really bring a really good strategic approach to the deals that you do. So I appreciate that. Also appreciate your friendship, but just wanted to say thanks for coming on the show today. And I wanted to just, ask how people can connect with you.
Yeah, and I'll echo the same comments from you, Bronson. I've been enjoying learning from you all along the way, and you played a great role, not only directly, but also indirectly in your network and introductions that you've made to people. So I appreciate that very much. So I did put my story in a book with a few other co-authors, and it did make Amazon #1 bestseller. If you're interested in it, send me an email, go to investonmainstreet.com, and you'll see set up an investor introductory meeting. We'll have a chat. I'll send you a signed copy of the book. My email is patrick@investonmainstreet.com as well, and I look forward to meeting you.
Awesome. Thanks, Patrick. Appreciate you coming on today.
Thanks, Bronson.
So Patrick, as you can tell, very passionate, very smart guy, really is good at what he does. And I think, it's amazing how you can bring other expertise, other knowledge, other skills, other job experience into real estate. I've seen a number of people really hit the ground running because they have skills. So he's got some engineering and very technical type of skills he brings to a deal analysis. He's really also has some sales, but he basically can do a lot of different things. So he brought all that to multifamily. So for you, whatever your skills are, whatever your background is, you can learn what it is you don't know. But I really believe that learning about multifamily, whether you want to be passive, you want to be active, and I really think, passive real estate investing is one of the most valuable skills that you can possibly learn. And we should all aspire to it, even if we desire to be active, because there may come a point where you don't want to be as active, or you don't want to be, the one who's managing all the stuff, and you actually can have freedom over your time where you vet a deal and you vet a property, and then it becomes really passive. So they say there's no such thing as fully passive investing, right? Because no one cares about your money like you do. So you do need to vet a deal. You do need to vet a sponsor. You do need to do the work on your end to make sure that you're educating yourself about all of it. And then, anything that happens in a deal, just really use it as a learning experience that as you go forward, you'll continue to, continue to learn and grow in that way. So most people I find that invest passively, they really enjoy it. I'd say there's a couple percent of people, maybe 2%, like, I really want to be more active. So they do a little bit of both, or they really want to come, only to do more active. But in order to scale, it is really important that you have team. In order to have team, you have to trust other people. So whether you're active or passive, that really exists there. So if you're interested in joining us on one of our upcoming deals, you can go to bronsonequity.com and click the join button, and you can hear about, schedule a call with us, and we'll develop a relationship with you, and we can schedule a call together to talk about investing in future deals. So thanks again for educating yourself. Look forward to seeing you on the next episode.
You've been listening to the Mailbox Money Podcast. For more free resources, articles, and videos, go to bronsonequity.com. There you can download your copy of the special report, The Single Best Investment Strategy During and After a Pandemic. None of the information shared here is an offer to buy a specific investment, and this is for educational purposes only. Consult your financial, legal, and tax professionals and use your own common sense before making any investment decisions. Thanks for joining us, and be sure to tune in next time for more Mailbox Money.